Ira Epstein of Linn Associates with your agriculture wrap-up for this Monday, the 18th of November, 2019, about 3:20 in the afternoon. And as you can see, a mixed day, but I say mixed because Chicago wheat was up, but if you look at corn and beans, still down. And I just looked to see where the harvest is at this time because the USDA just released these numbers, and the soybean harvest is about where it was a year ago. So I think that's weighing on this market too, the fact that you don't really have the problems you thought you might have, and we'll talk about that in a moment here as farmers are able to catch up on the harvest. Stock market at another record. What's new about that? Dollar index down a little bit. And remember, in the British pound, you're going to have a big debate tomorrow between Prime Minister Johnson and Jeremy Corbyn. Energies on the weak side all the way through. Breaks here in the nat gas. I don't know why I've got December still up there. We shouldn't be looking at that. We should be looking at the next month. I'll make a change to that shortly. As we look at the weekly area chart of closes, you can see how this market's on a slope to the downside. And again, you may be setting up for a challenge of this 891 zone as the market still hasn't determined where a harvest low is. And I use the word harvest low because you get this selling pressure, and it often culminates where the farmer says, I'm not going to sell anymore. It's why sell this late in the year? Tax reasons, blah, blah. And they're getting their additional farm payments now. That's all coming up. So I'm looking for that. Am I bullish? No, that's not what I'm saying. I think you're in a corrective phase, and I just don't know where that part comes to an end. You see that correction phase on the daily January chart. This is a break low for this current move, which puts you to right into this area. In other words, you've been now playing in here. Now we're coming into the mid-range of that possibly. 890 was the break low in the last big break that we had in September. So could we be going there? Well, that ties in with that 881 area that I keep talking about, that 18-week average of closes. In terms of the swing line, what the market did on Friday was it rallied up enough to break the pattern of lower highs, lower lows. Today, the market gives that up and a new break low. That doesn't reinstate the downtrend on the swing line. What it means is you're into a sloppy area. That's probably the best way to phrase it. You had some short covering. It certainly didn't last in any manner. I'm also looking at key moving averages. So what the market did last week, if we come to Thursday, it had gotten down to the 100-day average, the first challenge of that since way back in September. Resistance would be back at the 200-day average. It got over that. That means the 18-day could be in play, and instead today it comes down. Let's look at the Bollinger Band to get an idea of the further support. What really happened here, and we come back the same way. You hit the combination last Thursday of the 100-day and the Bollinger Band. The first challenge generally results in the market trying to make a stand at that point, which it did. The market comes back up, takes out that high, and today goes back to challenge them. Now, in a real bearish market, what the market's going to do is this. It's going to embed. Remember what I just said, in a real bearish market. You stop thinking about the swing line, and until you lose the embedded reading, which is fully in place now, you could start laying on that lower Bollinger Band and just driving it down. In plain English, until this turns up with the red line, I think the bears have completely dominated the market now, and they're taking control again. Meal oil reversed today in favor of oil gaining on meal. That's not a bullish sign typically. You can see that the meal for the first challenge, this was Thursday's action. This was Friday's action. It didn't seem right to me. This is Friday. This morning you went up to the upper Bollinger Band, and from there started your reversal. It culminated in taking out even the lows of last Thursday, giving you a big reversal down. Until this high's taken out, market's making a statement that it maybe has seen enough of this contra-trend rally and it wants to resume downside pressure. Could be the 299.5 zone. On the way back up, I wouldn't be surprised if the 18 and the 100-day would come into play as resistance. In soy oil, you're not getting down to the lower Bollinger Band at this point. You had a nice reversal up, but basically, if we look at the range of Friday, it was 30.84 to 30.41, and you stayed within it. So you have what's called an inside trading day. If you break again through this low, then look for wherever that Bollinger Band is to come in. But you have an oversold market This is now, to me, the market one to avoid. You're too close to that lower Bollinger Band without even being close to an embedded process. In the corn, just plain real bearish. You're riding the Bollinger Band lower. Corn is still behind on the harvest numbers, like I was talking on soybeans, but you're not getting any bounces at all. This market just laying down. And my guess is that all the grains, until we'd hear something on U.S.-Chinese trade talk as to what amounts and what are they going to buy, the grain market is saying there's problems here. Wheat's the market that bounced, but I don't think it's a trend change. You got down on, and if you take a look at this on Friday, to the lower Bollinger Band. If you exceed it, the next support, because it's the closest average, is the 100, and the resistance is the 18-day if it rallies. It's still in a downtrend. All that today did, it did not hit the 100. It got close to it, but it missed it. You're in an oversold market that's had an outside day up. I'm going to look for resistance in this 511 area, and certainly at the upper Bollinger Band on bounces in the market. In the sugar market, you've been correcting since you got up to the upper Bollinger Band. And one of the things that I teach in my charting course and other places is when you get this combination of the 100-day and the Bollinger Band, it's rather strong. It does not mean, I don't know anything that has to stop a market, but you play the probabilities. So the market's correcting. The 100-day is acting as the resistance. You come up, and this was last Wednesday, get over the upper Bollinger Band. Again, it's one of the first tests after you've come back to the 18-day average. I look for those to generally pull back. Here's the market on Thursday, here's the market on Friday, here's today. Have we turned the trend down? No, but you're very, very overbought. You have a situation here where both numbers are in the 70s. They're not going sideways in the 80s, so I don't think this market qualifies just yet for a move in one direction or the other that's necessarily going to hold. In the coffee market, you still have this pattern where up here you lost the embedded reading. Often that means price and the 18-day average come together. Now, if you look at this 18-day average of closes, it's moving to the tune of about 50 points a day, roughly. That doesn't mean it's going to stay that way every day. But with that, I'm going to look at the 108.20 area for tomorrow as the support zone, and you got to 108.50 today. Wouldn't surprise me if you'd kiss it, and we'll see if the market responds to any support at that level. I don't see anything fresh there. In the cocoa, all I see is a market that moved to the right-hand side of the upper Bollinger Band. It's a breakout from the sideways action. See these black dashed lines? Those are your Bollinger Bands, and the market had gotten into a very sideways action, restrictive pattern, if you will, and the market finally broke out. Now, you never know. I don't care who the trader is. You don't know if this is going to be a breakout, that. You need at least a day or two. And the market qualified, and you had a heck of a run. You knocked out probably a large group of shorts. And now the market's at the point where if you looked at Friday's close at 26.81, you were over the upper Bollinger Band the day before you were, the day before you were as well, and right here. Now you had 4 days in a row. It's not common to get 5. So what the market's doing is it's pulling back. That does not mean a top's in place. It means there might be better opportunities for the longs or those who want to be long between this area and here. And I think it's a warning sign to those that have been long that the market may be changing its character, not turning bearish. It just might be ready for some money to come off the table. Cotton market. One of the things I've been pretty consistent on is telling you I see a chop action in here where there's no follow through, and I'm going to stay right with what I'm saying. I don't know how the market will eventually break out. We were talking in the office this morning as to what, not me, but other analysts in the office thought would be the 3 plays of next year, and they came up with cotton, sugar, and the oilseed market to the upside. I have no idea if they'll be right or wrong. I'm not looking for those type of moves anyways. I think it's rough enough to get through today in futures into tomorrow. In the cattle market, cattle did something bullish today. Number one, it's been in a corrective mode. Number two, it had an outside day up. It kept the embedded reading. So I don't think the pros were buying today on the break. I think that when you crossed Friday's highs, you attracted some interest over the 124.42 area. You didn't go that far. You're at 125.10. But if you take that low out, then I'd get nervous that this market is acting like a distribution pattern up here and might be ready to pull back. That to me is going to be the key number over the next 2 days. In the feeder cattle, I see a market that's gone for 4 days down to the 18-day average of closes and has gone sideways from there. If the market takes out today's low tomorrow, that could set up the pattern of lower highs, as you see, and a lower low. You don't have that just yet. The key would be you'd have to close lower on the day without getting under that and getting your whip back. In the hog market, you're now under the lower Bollinger Band, and you know what I say. On Friday, and this was Friday's action, that's where I think pros came out of the market. I realize it's another 177 points lower, but it's still that sideways action down here and oversold. I think the smart money's taking something off the table as you're not even trending. You know, one of the things that I like to do is offer my research to people if you've never seen it before. Now, let me describe what that is. Twice a day, and this is Monday through Thursday, I write newsletters. Those letters go out at 11:30 in the morning, at 8 at night, roughly. Then you can see my morning subscriber video if you've not tried it out before. You get to keep up with what I'm writing, my special updates and so on, special reports, which I owe couple of them to everybody right now, and I'm going to try to do them. In fact, I was talking about that just before I came in here, that it's time for me to do it. So you get, if you're a Windows envelope person, which is another tool that's used for areas of resistance and support, I give you those numbers as well every day. A lot of followers of that. So how do you get it all? Well, it's simple. Give my staff a call, 866-973-2077. You can go to our website. Look under the free offers area, click that off. We'll be able to put you on this, or click up here. I'm Ira. You have a good day, and I'll talk to you tomorrow.